All right, so let's get into it. It's been another big week. Saylor just sold off more Bitcoin. Apple ripped back to $308. Tesla got absolutely smashed on Thursday despite beating on deliveries. And we've got the Fed minutes to look over on Wednesday, which could move absolutely everything again. So let's break it all down. So Strategy just sold off more Bitcoin this week, and it looks absolutely awful for him. After telling absolutely everyone for the last 10 years to never sell your Bitcoin. Between June the 29th and June the 30th, they sold off another 1,363 Bitcoin, an average price of 59,000. And then between July the 1st and July the 5th, another 2,225 Bitcoin, an average price of 61,000. So that brings his holdings down to around 843,000 Bitcoin, which is still huge, but he's got a cost base of 75,500, meaning right now he is down underwater quite badly. He posted that he's currently in an 8.3 billion loss on digital assets in Q2, so obviously it's all unrealized, but they've hoped to wipe out the deferred tax asset tied to it completely. Now, to be fair with Saylor, it's not panic selling. It's part of the disclosed Bitcoin monetization program, which he released a couple of weeks ago, funding preferred stock distributions and topping up the USD reserve, which sits currently around 2.5 billion without looking. But the largest corporate Bitcoin holder on the planet is selling into the liquidity rather than buying a dip. That tells you absolutely everything you need to know about where we are in the cycle. My take on this is when the biggest corporate holder in the game is currently underwater on their own average cost and selling into every little tiny bit of liquidity, that's not a sign of strength. That's a sign the top buyers have already bought, and I still fully expect to see 50,000, 55,000 over the next 1 to 2 months. It doesn't mean we can't have a relief rally first. Wouldn't be shocked if we bounced hard between $60,000 and $65,000 over the next couple of days if potentially we do hold 60,000 again, but I'm still expecting that leg down. I'm short from the last 3 entries on the trading floor, so 78,500, 65,000 and 61,800, and there's no reason for me to close any of those positions out because the targets still haven't been hit at 55,000. So just a quick one on Apple. You can see this absolutely beautiful cup and handle playing out since last November. Price pulled all the way back down to around 9, 21, 50, 100 and a 200-day moving averages after topping out around $325 in June. So the buyer stepped straight back in and we closed around 5% up on the day, back to around $308.63. Right into the 308 to the 315 supply zone. If we can clear $317 with volume, the next stop should be around $335 to around $350. So the big level to watch on any pullback is around $289. So that's the entire neckline of this pattern. Lose that and the handle breaks. Hold that, and I believe we'll just continue this uptrend until the stock market peaks probably later this year. So my take here is if you're not already in the trade, I'd let it run out for the next couple of days and see where we retest, and then potentially if we do get a strong retest of the 21 moving average, I believe that's another good entry spot. Moving on to one we got hit a little bit hard on Thursday last week was the Tesla trade. So you've got the absolute opposite of what Apple just achieved. We dropped around 8% on the delivery news. So it was a classic sell the news reaction, in my opinion. The print was good. It was better than expected, but clearly not good enough to justify where expectations had to run. The stock's now holding around the $400 level, which is the psychological line in the sand as much as a technical one. So not a name I'm actively positioned in, but $400 is the level I want to see hold. And if we can see that hold over the next couple of days and we start climbing back to around 405, that's definitely where I'm going to be adding into the position. So moving on to the macro calendar, what could actually move the markets this week? We've got a big one coming on Wednesday, July the 8th. So we've got the FOMC minutes from the June meeting. This is the first look under the hood at how the new Fed chair, Kevin Warsh, is running things. Remember, he didn't even participate in a dot plot last week, which tells you he wants to run things completely different from how Jerome Powell was running it for the last couple of years. Not necessarily a bad thing, but it does leave us without very many clues until it starts playing out. So the backdrop here is the CPI printing at 4.2% year on year in May. That's the largest 12-month increase since April 2023. So it keeps the door open for the Fed staying restrictive for longer, especially with the tariff-related cost pressures, which is still filtering through. There's also a legal fight over the Section 122 tariffs, but I won't really get into that in a moment. But put it all together, we've got sticky inflation, a cautious Fed, and a structural Bitcoin seller underwater on his cost basis. None of that screams that we're in a bull market or risk on. So my view going into this, I don't think Walsh cuts anytime soon. I've mentioned that several times over the last 6 months. There's no reason for him to cut rates. If anything, I mean, without looking, there was 6 out of the 18 what believed we should have had 2 rate hikes this year. And 12 also agreed that we should have at least 1. Not a single one of them wanted rate cuts, and there's no reason to have it. So if those minutes come in hawkish on Wednesday, then I expect risk assets, including Bitcoin, to take another leg lower. That's exactly why I'm comfortable staying in my long-term short position from 78,500, 65,500 to then our intraday, which is around 61,500. So basically, I'm adding short on every single time we get a leg up until something changes fundamentally. Nothing changes altogether. So that's this week. I'll be laying out the exact levels, the invalidation points, and how I'm sizing the Bitcoin short on the trading floor, which is around $15 a month, and it gets you to daily research every single day. So the trade setups I don't post publicly. The community is now just over 1,500 members, and we're all working through the stuff together. So speak to you soon. Peace.